Everywhere you look today, there's a new promise being made to investors. Let AI do the hard work. It's from apps that claim to pick winning stocks, to platforms that automatically rebalance your portfolio, to tools that analyze thousands of data points in seconds. Artificial intelligence is being marketed as the future of investing. But here's the real question. Do these tools actually add value? Or are they just smart-looking dashboards built on basic automation? Because investing has always been a space full of noise, hype, and overconfidence. And now, AI has entered the conversation, so I decided to test it. Not just one tool, but multiple AI investing platforms. From beginner-friendly apps to more advanced systems used by serious traders, I wanted to find out something simple. If you're an everyday investor, are AI tools actually worth your time and money? Or are you better off doing things yourself? What I found was surprising, because the answer isn't as simple as yes or no. What are AI investing tools really? Before testing anything, I needed to understand what these tools actually do beyond the marketing. Most AI investing platforms fall into a few categories. Some are robo-advisors that automatically manage your portfolio. Others focus on stock analysis, using algorithms to detect trends or generate trade ideas. And some are hybrid tools that combine financial planning with predictive analytics. To test a realistic range, I used beginner-level platforms like Robinhood and Acorns, which are designed for accessibility, alongside more advanced tools like TradingView and MetaTrader 5, which offer deeper analytics and customization. I also used AI assistance through ChatGPT to interpret data and simulate decision-making. What became clear very quickly was that not all AI tools are equal. Some are genuinely intelligent systems, others are simply automation, with a modern label, and that distinction matters. The beginner experience? Simple, clean, but limited. Starting with beginner-friendly tools, the experience felt smooth and accessible. Apps like Robinhood and Acorns are designed to remove complexity. They simplify investing into a few taps, suggesting portfolios, automating contributions, and providing basic insights. For someone new to investing, this is powerful. It removes hesitation, it creates consistency, and it helps build the habit of investing without needing deep knowledge. But as I use these tools more actively, I started noticing limitations. The AI behind them often focuses on broad recommendations rather than personalized strategy. It simplifies decisions, but sometimes oversimplifies them. For example, portfolio suggestions are usually based on general risk categories rather than nuanced financial goals. Market insights tend to be surface level, designed for readability rather than depth. And while that's helpful for beginners, it's not enough for someone trying to actively improve performance. This is where the gap between simplicity and sophistication becomes clear. When I moved to more advanced platforms like TradingView and MetaTrader 5, the experience changed completely. Instead of being guided step by step, I was given access to a wide range of tools, charts, indicators, data overlays, and customizable strategies. These platforms don't make decisions for you. They give you the ability to analyze deeply. When combined with AI, they become significantly more powerful. AI can help interpret patterns, highlight anomalies, and generate insights based on large data sets. But here's the catch. These tools require knowledge. Without understanding how markets work, how indicators behave, and how risk should be managed, the complexity can actually become a disadvantage in some cases. Having too much information led to overthinking rather than better decisions. So while advanced AI tools offer more power, they also demand more responsibility. The most important question wasn't how these tools looked or felt. It was whether they actually improved outcomes over the testing period. I tracked performance across different approaches using beginner tools, advanced platforms, and a combination of AI-assisted analysis. What I noticed was not dramatic outperformance. There were no instant wins or massive gains. Instead, the improvements were subtle: better timing on entries, more disciplined exits, Reduced emotional decisions. AI didn't guarantee success, but it helped reduce mistakes. And in investing, avoiding mistakes is often more important than chasing wins. After testing multiple tools, I started to see a pattern. AI was most valuable in 3 areas. First, data analysis. It could process large amounts of information quickly and identify patterns that would take humans much longer to notice. Second, consistency. AI doesn't get tired, emotional, or distracted. It follows rules without deviation. Third, awareness. It highlighted trends, risks, and inefficiencies that I would normally overlook. These advantages don't replace human decision-making, but they enhance it. And that's where the real value lies. Despite its strengths, AI has clear limitations. It lacks context. It doesn't fully understand real-world events, sudden market shifts, or the emotional impact of news. It works with patterns, but not always with meaning. There were moments where AI recommendations felt technically correct but practically questionable. It could suggest a move based on data, without considering broader implications, and this is where blindly trusting AI becomes risky, because markets are not just mathematical systems. They are influenced by human behavior, policy decisions, and unpredictable events. AI can analyze the past and present, but the future still requires interpretation. One of the biggest trade-offs I noticed was not financial, it was intellectual. Beginner tools made investing easier, but they also reduced the need to understand what was happening. Advanced tools provided insight but required effort. AI sits in the middle. It can simplify decisions, but if overused, it can also reduce learning, and that creates a risk, becoming dependent without understanding, which, in the long run, can be more dangerous than making mistakes. After testing everything, here's the honest answer. Yes, but only if you use them correctly. AI investing tools are not magic. They won't make you rich. Overnight, they won't eliminate risk, but they can improve your process. They can help you stay disciplined. They can reduce emotional mistakes. They can enhance your analysis. The key is not to rely on them completely, but to use them as support. This experiment wasn't about finding the best tool. It was about understanding how technology fits into decision-making. And the conclusion is clear. The future of investing isn't AI replacing humans. It's AI assisting humans. Those who ignore these tools will fall behind. Those who depend on them blindly will struggle. But those who learn how to combine technology with understanding will have an advantage. If you found this breakdown helpful, like the video, subscribe for more AI plus finance deep dives. Share this with someone interested in investing. Comment below. Do you think AI tools are the future of investing, or just a trend? Because the way we invest is changing, and this is just the beginning.